Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video, two problems I have completed on receivables management. Now in this video, one more problem I am going to explain regarding receivables management. That means the credit policy may be liberalized or it may be stricter. Liberalized policy means presently suppose 1 month is given. Now the business want to extend the credit period to customers either 2 months or 3 months or 4 months. This is called liberalized policy. And second policy are stricter policy. Example, presently the business gives 3-month credit period. Now they want to reduce the credit period to 2 months or 1 month. This is called stricter policy. The last video, two problems what I have done was on liberalized policy. Now in this video, the third problem is on stricter policy. Presently 2 months credit period is given. Now the company wants to reduce it to 1.5 month, one and a half month or 1 month. So we want to evaluate whether it will be beneficial to change the policy to the proposed policy. That we have to evaluate, right? So already the theory video I have uploaded regarding receivables management. So if you have not watched, I suggest you go to the playlist of my channel. Select the subject financial management for BBA. Select the video of receivables management. Watch the complete theoretical concept. What do you mean by receivables management? What is the importance of receivables management and how to evaluate the proposed credit policy? What is factoring, what is aging schedule, all these things I have explained in the theory video. In examination, you may be asked a problem or theory also will be asked. So don't underestimate, don't ignore the theory. Watch the video from beginning till end to get the complete grasp of the concepts. Before explaining problem number 3, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points which I have written on the board, then I'll explain. Come on, see the problem number 3. The annual sales of a company are rupees 24 lakhs. So presently, the total sales revenue in 1 year is 24 lakh. Selling price per unit is 10 rupees. So how many units are sold? 24 lakh rupees is the total sales and selling price per unit is 10. So 24 lakh divided by 10, you will get 2,40,000 units are sold at present. The variable cost is 70% of sales. Then average cost is 9 rupees per unit and required rate of return on investment is 20%. Annual collection expenditure is 50,000. The estimated percentage of default is nothing but bad debts. The present bad debts are 3% and credit term is 2 months. This is the complete information given regarding the present credit policy. What is the policy? Presently 2 months credit period is given. Presently 3% is the bad debts and the selling price per unit is 10 rupees. In that variable cost is 70%. So 70% of 10 rupees, 7 rupees is the variable cost. And average cost is 9 rupees per unit, right? And the company wants a return of 20% on investment. That is the present data. Now the company is considering two new proposals. Proposal A, Proposal B. Average collection period in months, 1.5, A proposal, B proposal, 1 month. Presently, the company allows 2 months. Now in A policy, it wants to reduce from 2 months to 1.5 months. And for B policy, reduce it to 1 month. Now we want to evaluate whether proposal A or proposal B should be adopted. Average collection expenditure 75,000 for A and B 1,50,000. Presently average collection period is 50,000, right? If we reduce the collection period, if we reduce the credit term, the collection expenditure will increase. Next, percentage default. This is the bad debts. Presently the bad debts are 3%. Now in A policy it will become 2%, B policy it will become 1%. Suggest the collection program preferable. Now we want to evaluate these two proposals. So whether we should adopt proposal A or proposal B. Understanding the problem is very, very important. If you understood the contents of the problem, half of the problem is solved. So don't mechanically or directly go to solution. Try to understand the contents of the problem. And I suggest to my viewers, always keep a calculator, notebook, pen ready. When I say something important, immediately you should note it down. Maintain the running notes. Then only you can be able to understand properly and you can be able to remember for a long period of time. Now, how to proceed? Now I am going to show. Stricter policy. Because we are making strict. Presently 2 months. We want to reduce it to 1.5 or 1 month. Then existing policy, bad debts. Bad debts we are calculating. Presently the rate of bad debts is 3%. 3% of what? Total sales. Total sales are 24 lakh. So 3% of 24 lakh, 72,000 is the bad debts. Presently, existing policy. In A policy, it has been reduced to 2%. Sales, there is no change in sales given. If the sales change has been given, we would have calculated the profit. So there is no change in sales. That's why we compare the cost of operation, right? Now, policy A, 2% of 24 lakh, 48,000. Policy B, 1% of 24 lakh, it is 24,000. So we have calculated the bad debts. Now, the solution will be like this. Financial evaluation of proposed policies. We are evaluating. We are comparing the cost of operation. Cost of operation. Annual collection expenditure. That is given in the problem. No need of any calculations. Presently, the collection expenditure is 50,000. A policy 75,000. B policy 1,50,000. That is given. No calculation. Now, bad debts. Loss due to bad debts. In working note, we have calculated. Just now I told you the present rate is 3%. In A policy 2%. In B policy 1%. So we got 72,000, 48,000 and 24,000. So two items we have calculated. First, collection expenditure. Second, bad debts. The third one is cost of investment in debtors. When the business makes the investment, making the expenditure, it wants some return because the cost of capital is there. So from wherever the company has raised the funds, it has to pay the cost of capital. So the money invested in debtors, the business wants some return. That is called cost of investment in debtors, right? At what rate? It is given 20%. 20% of the investment in debtors. Write it down better. 20% of investment in debtors. So we want, what is the investment in existing policy, A policy and B policy. How much is the investment? Now here I have shown the calculations. Average cost per unit is 9 rupees. Average cost. Whereas variable cost is given in the problem 70% of selling price. The selling price is 10 rupees. So 70% of 10 rupees, 7 rupees. So 9 rupees is the average cost, 7 rupees is the variable cost. Subtract 7. 2 rupees is the fixed cost. So from average cost, if we subtract variable cost, the remaining cost is the fixed cost. So per unit, 2 rupees. Now present number of units. The total sales are 24 lakh and the selling price per unit 10 rupees. So 24 lakh divided by 10, you will get 2,40,000 units are sold at present. The total fixed cost, how much? 2,40,000 into 2 rupees. 4,80,000 is the fixed cost, total fixed cost. Now total cost. Total cost consists of sum of variable cost and fixed cost. The fixed cost is 4,80,000, just now we have calculated. Variable cost is 7 rupees per unit. Here it is, we have calculated. So multiply 2,40,000 into 7, 16,80,000. Now you add up both 4,80,000 plus 16,80,000, 21,60,000. 21,60,000 is the total cost for 1 year. But the business is not making the investment for 1 year. It is making only for the credit period. Presently, the credit period allowed is 2 months, right? So for 1 year, it is 21,60,000. For 2 months, how much? Here I have calculated. Investment in receivables. Total cost 21,60,000 into 2 by 12. Because for 12 months, it is 21,60,000. But we don't require 12 months. We want only 2 months. 2 महीने तक पैसा ब्लॉक है, तो 2 महीने का इन्वेस्टमेंट कितना होगा? तो 21,60,000 into 2 by 12, 3,60,000. This is the investment in receivables in the existing policy. Policy A, 21,60,000 into 1.5 by 12. 1.5 month is the credit period allowed in policy A. So 1.5 by 12, it comes to 2,70,000. And C policy, 21,60,000 into 1 by 12. Because credit period allowed is only 1 month. So for 1 month, the money is blocked. So we want the return on 1 month investment. So 21,60,000 into 1 by 12, 1,80,000. These are the investment in receivables. Now the company wants 20% return on this investment. So calculate 20% of these amounts. So here I have calculated a return on investment at the rate of 20% on investment in receivables. So 20% of 3,60,000, 72,000. 20% of 2,70,000, 54,000. 20% of 1,80,000, 36,000. So we have calculated what the cost of investment in debtors. So what is the cost of investment in debtors? 72,000. Here I have taken 72,000. In A policy, 54,000. In B policy, 36,000. That's all. These are the 3 costs incurred. Now we find out what is the cost, total cost. So add up these 3, 1,94,000 is the total cost of operation in the present existing policy. That means when we give 2 months credit period to customers, our cost of operation is 1,94,000 in 1 year. Whereas in A policy, it comes to 1,77,000. This is the cost of operation. In B policy, 2,10,000. तो 2 महीने का क्रेडिट पीरियड देंगे तो हमको 1,94,000 एक साल का टोटल कॉस्ट ऑफ ऑपरेशन. जब 1 महीना कर देंगे, 1.5 मंथ्स कर देंगे, 1.5 मंथ कर देंगे, तो कॉस्ट 1,77,000 जा रहा है. जब 1 मंथ क्रेडिट पीरियड देंगे तो इट कम्स टू 2,10,000. नाउ कंपेयर एंड सी वेयर द कॉस्ट ऑफ ऑपरेशन इज द लोएस्ट. Here the cost of operation is the lowest, 1,77,000. For which policy? A policy. A policy is of what? 1.5 month. 1.5 month. That is the A policy given in the problem. Finished. Now we have to give the conclusion. Conclusion will be, it is suggested to adopt policy A. That is, make a credit period of 1.5 months. Since in this case, the cost of operation is the lowest. That is 1,77,000. So what we have done in the previous 2 problems, liberalized policy we have evaluated, extended policy we have evaluated. In this problem, we have evaluated a stricter policy. We have reduced the credit period from 2 months to 1.5 month or 1 month, like that. This is a method of solving a problem on receivables management. So if you want the perfect knowledge, watch each and every video. Apart from this, I have already uploaded so many subjects, videos. You can visit the playlist. You can see the videos of financial accounting, corporate accounting, cost accounting, management accounting, taxation, and financial. Apart from financial management, operation management is there. Operation research is there, and auditing is there, business economics, so many subjects, videos I have uploaded. So if you are satisfied with my lecture, give a like to the video. Share my channel among your friends, among your group, so that more students can watch the video. And subscribe my channel if you have not yet subscribed. And join the membership club also for exclusive videos for members. Inshallah, we will continue the next problem in the next video.